Hey everyone, welcome back to Corporate Decoder, the place where we tell you what's going on with these big businesses. Today we're diving into a report that's a bit like a roller coaster full of ups and downs. Think of it as a financial story where a company is trying to find its footing while a lot around it keeps changing. Before we start, if you appreciate these direct insights from the complex world of corporate reports, make sure to like this video and subscribe for more. We also have a Discord community. The link is in the description below. We're looking at Aimfinity Investment Corp.'s latest 10Q filing. This is like a quarterly checkup, giving us a snapshot of how they did in the first 3 months of 2025. Now, Aimfinity is what they call a blank check company. That means they were formed to find another company to merge with. Think of it as a dating service, but for businesses. First, a quick look at how many shares are out there. As of June, they had around 1.7 million Class A ordinary shares. This is the regular stock, and about 2 million Class B ordinary shares. The Class B shares are typically owned by the founders and have some different voting rights. Now, let's get into the financials. This is like looking at their bank account, what they own versus what they owe. First, the cash. At the end of March, they only had about $4,895 in cash. Compare this to December of the previous year when they also had about $4,895, so no change there. Now, this is where things get more interesting. They had about $13.6 million in a trust account. This is money set aside from their IPO, and it's meant to help them do a business deal later on. But back in December of the previous year, that trust account had almost $37 million. What happened? A big reason for the drop is that many shareholders decided to redeem their shares. This means they basically cashed out, taking their money out of the company. The amount used for this was roughly $23 million. Moving to the liability side, what they owe, we see about $929,000 in accounts payable. In December of the previous year, it was around $767,000, so this is quite a bit more. They also have debts to related parties, specifically these extension loans. These are loans taken out to extend the amount of time. Aimfinity has to complete its deal. All told, the company has roughly $6.5 million in total liabilities. Finally, if we look at shareholders' equity, we see what's called a deficit. A deficit is almost like debt, except the company owes it to its shareholders. As of March, this deficit was over $6.5 million. Now let's look at the income statement. This tells how much money is coming in and out. Here we see first operating costs of about $277,000 for the first 3 months of 2025. These are costs associated with trying to find a company to merge. A year back, this number was around $130,000, so this number has more than doubled. The good news is that they did earn some money from the trust account, about $342,000. Even better, when we net it all out, Aimfinity actually made a profit of around $65,000 for those 3 months. But it's worth noting that the first 3 months of 2024 had almost $440,000 in net income in the first 3 months. 2024 had almost $40,000 in net income. In the first 3 months, 2024 had almost $440,000 in net income in the first 3 months, a sharp difference. Earnings per share basically tell you how much profit is earned per individual piece of the company. During the first 3 months of 2025, it was less than 20 cents per share. Now let's focus on changes in shareholder deficit. This is like analyzing how owners' share in the company changed over time. I'll keep it very shallow for the sake of your brain. You will see the extension funds attributable and accretion of carrying value. These all have to do with complex accounting practices that are not important for us to understand. Let's get to another critical question. Where is the cash going? That's what the cash flow statement tells us. Right off the bat, the company used roughly $115,000 cash for operations. However, those first 3 months also saw them pull out over $23 million from that trust account. This amount pretty much matched the cash outflows from redemptions as shares came up for sale on the market. Again, people are pulling out their investments. The only positive cash flow from financing was found to come in from proceeds from the extension loan and working capital loan, roughly $282,000. When the numbers were all netted out, the financing activities had the negative effect of having used over $23 million of cash. Now let's switch gears and quickly check out the accounting policies, in other words, how they are doing math for these reports. It includes a summary of all standards, including the company's treatment of dot merchants as a growth company, cash and cash equivalents, FLIC cash from trust accounts, files warrants, ordinary shares, etc. Now this is a crucial section. Basically, The auditor looking at the firm is wondering if this company can continue its operations down the line or if it will go bust. Here, auditors do mention that at the time of this filing, they say that questions are raised as to whether they can continue. What is the company trying to do? They had struck a deal to merge with a business called Doctor. They amended it a few times throughout this year. I'll keep it short. The military actions and sanctions with Ukraine have cast a shadow. There's no telling how it will affect the company's ability to perform operations. Around the same time, shortly after their IPO, Aimfinity completed a private placement, which is basically when people that are in the know bought extra units and raised $4.9 million. What's going on with the stock and who owns it? Well, they can issue up to 200 million Class A shares and 20 million Class B shares. Who is Aimfinity connected to and what dealings did they have? The CEO and other people have an agreement about their founder shares, how they're going to return them if they leave before the deal. Aimfinity has agreed to loan the company up to $1.5 million or so to be used for its working capital. What the placement does is get private units, and each private place unit had a class. Every time I say the word share, it also means warrants too. The company has also taken out around almost $1.5 million to extend a combination deadline. This is also non-interest bearing. Thank goodness or goodness, but it could convert it to shares. If we check segments, we find only one segment we can measure and analyze. Those are legal, professional service costs, and interest rates. Basically, while completing the audit, did anything happen that might affect the company? Here are a few that they talk about. They highlight how in April their promoter deposited $5,000 into a trust account for public shareholders. A certain ordinary Class A share was submitted. Now, let's consider the big picture. Is this company heading in the right direction? First, Aimfinity faces some major risks. It's operating with a very small amount of cash. The high redemption rate is a bad signal. It implies a lack of shareholder confidence. The company also seems to be burning money on operating costs while it has significant debt. However, Aimfinity has a few potential opportunities, particularly if its merger goes through. This acquisition of Inkrock may have a good return. There also is some level of insider support which might turn out to be a good bet, but also might come off as overconfident. In essence, proceed with extreme caution, as they say. Aimfinity's story is still being written and it could go either way. What are your thoughts on this? Join our community Discord, link in description to tell all of us what you think. If you enjoyed this analysis, please hit the like button and subscribe for more insights. Thanks for tuning in, and I will see you in the next video.